Hey everyone, this is Mark from Stocks and Cash. It is Sunday, March 1st, 2018. Here with your market update video, and I'm going to talk about some potential trade setups as I don't actually have any holdings at the moment. Just want to also wish to everyone a happy Easter and happy Passover for those that celebrate it. And with that, let's jump into the SPY. So you can see on Friday we put in kind of a doji-ish candle, but it was a bullish, more bullish than neutral candle. Although there is some concern that we did get above the 8 exponential moving average and we got above the low of this candle here on the second, but we got smacked down and weren't able to close above it. We also have this descending trend line that I drew here that touches 313, 321, and of course Thursday 329. So it will be interesting to see if we can get some momentum and close above here. That'll be a good first step, to kind of recovering and getting back up. The main target I would see is 270 here, or I guess I should say the initial target would be 270. If we get a close above 265, then I would start looking at getting into some long positions and seeing if we can come up and fill this gap at 270. And then from there, we would want to see if we can put in a higher high, up here above this high on the 13th. And we'd also want to get this gap filled here up at 280 or 281 approximately. So certainly a lot of targets to hit on a bullish perspective. Bearishly, certainly we could come back and pull back bearishly, but it looks like indicators are trying to start to turn up. Although Stokes are looking a little weak. MACD is starting to flatten out and looks like it wants to start turning up. RSI is turning up, and you can see that based on recent history, when we get this kind of bottom on the RSI, it tends to want to springboard us up. Now on the 5th, we didn't really get that bounce, although we kind of came down and put in a big bullish candle, but we still closed below the open of this candle on the 5th, and then we had this gravestone type candle and then continued on a little further downwards, but then we had RSI go below 30 again and we started to bounce and rally a bit. So will that happen here? Well, maybe. We had a big bearish candle. We tried to kind of push through the 265 and the 8 EMA. We got smacked down and didn't quite make it. Kind of a doji candle on the 28th, and then on the 29th we also got smacked down, but it was more of a bullish candle. And you can see, back here, just comparatively, we put in a big bearish candle, had a doji, and then we had this more bullish doji, and then we kind of took off. Now that being said, we were above the 100 simple moving average, whereas now we are pretty far below it, and we're also below, the 8 EMA. We're below this support level here, or resistance level here rather, of 265 or so. So there are some differences here, but it would be nice to see us close above 265, as I said, and see if we can get back up, at least fill this gap here, and then work on filling that second gap up there. Honestly, I think the market's still kind of a mixed bag right now. I don't think there's any clear direction in where we're going. As I mentioned, I drew this descending trend line. There's this potential ascending trend line. We'll see what happens in the coming days, but right now I'm not taking any positions on the market itself. Let's jump and look at the Qs real quick. So you can see the Qs did break below this trend line slightly, but on Wednesday, but on Thursday we closed back above it. So Qs is still looking okay. We tried to get above the 100 simple moving average. We touched the 8 basically, and we also tried to get above this 100% retracement level, which was from this day right here on the 2nd to the 12th. So that's certainly a resistance level for us now on the Qs. And very similar to the SPY, I see some gaps here that need to be filled. One here around 165 or so, and then another one here around 170, 171. So, we are looking like we're trying to trend upwards. Whether we do or not is yet to be seen. Again, I'm not taking any particular positions on the indices. I'm hoping that they'll break bullishly, but again, we really need to close above the 100 simple moving average and the 8 exponential moving average on the Qs. So let's take a look at some potential trade setups for tomorrow, and this really is going to depend on market action. give you a couple potential bearish setups. American Express. You can see here this descending trend line. Touched it here on the 27th, on the 12th, on the 21st, and again on the 29th. Each time we touch this ascending trend line, we get smacked down. So I wouldn't be surprised if American Express, which is already looking kind of weak in this channel, comes down and maybe breaks this low here. Probably not going to happen on Monday per se, but there's a potential for that to happen. Now, that being said, it's a little counterintuitive because as you can see, Stokes are trying to rally. MACD looks like it's trying to cross over bullishly. RSI is looking a little strong, but they're still in descending trends. We haven't started to break out bullishly yet, so that's why I say keep an eye on it. It really depends what the overall market is doing. I don't even think I would try a first 5-minute candle because we just don't know what the market's going to do at the open, and what's going to happen throughout the day. Volatility, let's look at the VIX real quick. Volatility, although it was down a bit on Friday, is still pretty strong. And we are still above our exponential moving averages on volatility. So I would just be cautious to get into a trade on the 5-minute right now, picking a direction, unless you're able to get out during the day. Let's take a look at Citibank, also looking bearish. We reached that first target here on 323. Had a little bit of a bounce, and then we started to get smacked down again, and we closed below these lows here on Friday. And I think there's more opportunity for a downside here. Excuse me, in the banks in Citi. That being said, we are pretty oversold on the Stokes, and RSI is starting to get oversold. So, I wouldn't short heavily on there. It just kind of depends what the overall market does. Again, I'd be cautious getting in immediately short. It depends what the market does, as I mentioned. And to me, it's just not clear what's going to happen on Monday. Not that it's ever clear, but in particular, it seems a bit indecisive. McDonald's, another potential short. So we put in a low here. We couldn't really put in a high, although this was the next level. Then we put in a lower low, and now we put in a lower high. And McDonald's might want to come back down again as we put in an ugly bearish candle on Friday. Indicators are looking bearish. Volume was pretty strong on this bearish move. I do think there's more downside potential opportunity on McDonald's. I'm not saying we'll definitely get all the way down back to 147, but it's certainly possible. Currently at 156. It's about a $10 move. You could put your stop up here, about $4 or so. So that's, almost a 3-to-1 risk, 2-to-1 risk. But there is a lot of potential downside on this move. Again, it's going to depend on what the overall market does, I believe. So a couple others. Home Depot, this is a wait and see. This one could potentially be bullish, although we are kind of near support, so it could break down potentially. But you can see that Friday had a very strong bullish candle. It wasn't a big one necessarily, but we held the highs and closed near the highs, which is always a good sign. MACD is still kind of trending downwards, but it looks like it wants to break out of that trend. Oh, and actually it did, as I drew that line. So, I'm sorry, Stokes. It's starting to look like it wants to rally. MACD has crossed over, although it briefly did back here on the 21st and broke down a little further. But it's looking like it wants to kind of pop up and start rebounding. RSI is looking pretty strong as well. So if the market does rally and starts doing well on Monday, I could definitely see Home Depot running with it. First targets would be the 55, 182, and the 100 around, sorry, where am I? 100 around 183.5 or so. And then, of course, the next targets after that would be this high here, back on 220. So I do think Home Depot definitely has some good potential. Spring's coming. A lot of people are going to be buying construction material for houses and other projects in the outdoors. So it seems to make sense to me. But let's wait for confirmation before we get into anything. Walmart. I was pretty bearish on this recently, but with recent price action, it looks like it's starting to break out and start to turn up bullishly. Unfortunately, we closed right around the 21 exponential moving average, and it wasn't above it. So we definitely want to get some confirmation that we're breaking out of this downtrend here, this downturn. But it does look as though we put in a base here, and you can see MACD is starting to turn up. Stokes are looking up, as is RSI. So if you're looking for a bullish move, Walmart may be a decent choice, decent option with low risk, high reward. We'd be looking at trying to fill this gap here around 102 or so, this gap between the 16th and the 20th. A couple others here. Kohl's, oops. So Kohl's, let me back out a little bit. So Kohl's has been kind of in this channel here, and we're kind of in no man's land-ish, but you can see that we had some bearish divergence, right? The MACD was looking very bearish, making lower lows, while the stock itself was staying strong. Now MACD looks like it wants to turn up, so I do think that it's kind of survived that potential downturn, held strong. We're above the 8 EMA. We've gotten above our resistance level, our warning zone here from the Stokes. I'm sorry, from the Fibonacci retracements. I apologize. Had a little mind fault there. But I do think we could potentially go higher on Kohl's. I would just be a little cautious of it, but first target would certainly be here at 69.12. And if we get above there, then we have our further targets of 72.02 and 75.8. So let's see what happens there. Again, I wouldn't necessarily get in on the first 5 minutes. We don't know what the market's going to do. Let's give it some breathing room and see how the markets behave tomorrow. Last one I'm going to cover, Seagate, STX. Been looking relatively strong, although it had a little bit of a pullback here. We're clearly making higher highs and lower, higher lows. Put in a high, a low, a higher high, and a lower, higher low. So we closed above the 8. We are above this short-term support here that was put in around 56. So I think if the markets are strong, there's certainly the opportunity to get above this 61.20 level here. If we do, targets of 65 and 71 approximately. So there's a long potential, for a big gain on Seagate potentially. And if you want, if it's in your trading plan, you could get in now, put your stop at the low here around 56. So you're risking about $2.50 for a $10 gain, which is a nice 5-to-1 ratio. So it'll depend on how the market behaves on Monday, of course. That's about it for right now. Hope everyone has a great day today, and good luck trading tomorrow. If you have any comments or questions, please feel free to leave them in the comments section. Have a great night.